You're tuned in to Agriculture Today, and we start our Friday show looking at the domestic and international grain market as the WASDE report has recently come out. And we take a look at this with K State grain economist Dan O'Brien and the senior economist at the IGP Institute at K State, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Very
Yeah,
good.
thank you very much, Shelby.
Dan, can you begin with just giving us a large overview of what we saw in this report when it comes to USDA balance sheets?
Yes, and USDA had seen what from the USDA numbers, the grain markets had taken a look at the results, and for prices, we just had like the December contract up about a penny or two for corn, for soybeans up about 10 or so, and hard red winter wheat down about 2, so really not much change. And when you look at the broad overview of what occurred in terms of the production numbers, the most awaited numbers in this report had to do with U.S. corn and soybean production, and so the trade ended up through a combination of a little bit higher yields, mainly for corn, raised U.S. corn production, the U.S. corn production figure up to 15.156 billion. So up really 39 million bushels. Yes, a lot of bushels, but in the bigger picture, not that much, just a slight increase. Sorghum production, 302 million bushels, up 23 million, a little bit lower, down 3 million bushels for soybeans. Still 4.586 billion, up 400 some from the previous from a year ago in 2023, and small change in cotton, lower, sugar a little bit lower. And when they looked at the usage side for domestic consumption, not a lot of change really at all. If rice, we don't grow a lot of rice in Kansas in almost any year. We don't have the moisture for it, but a little bit lower domestic consumption there, a little bit, just slightly higher for soybeans. So when you see that, it's telling you that, gosh, the supply demand balance sheets are going to wait another month or two till they get more surety from the October 1st, the November 1st crop production reports, and then if we do any adjustments on the usage side domestically, then we'll see changes on the use side of the balance sheets. And for prices, not a lot of change really. Corn down a dime, down to 410 in terms of the production. That's down from 465 last year, to get indicative of a pretty strong crop. And then you've got things happening on the livestock side, but really almost no change. I think grain sorghum was also down a dime, down to about 420 also, so no big change. And then for exports, you saw almost no changes in the 23-24 marketing year. You did see corn, by the time they closed out that marketing year ending August 31st, raised that 40 million bushels for corn exports up to 2.29 billion. So that's a positive. Looking out to next year, had pardon me, then there's some changes that happened in meat exports, actually increased a bit, and for pork and beef. Broilers down a little bit, turkey up slightly, total meat up a bit. And then looking out to next year, had a little bit more pessimism on grain sorghum export projections, 220 million. Pardon me, not pessimism, optimism. They raised that from 195 million up to 220, so that's positive for the grain sorghum outlook. And then cotton down a little bit. But a lot of what's happening on the export side has to do with foreign exchange. And Guy, I'll turn that over to you.
Yeah, thanks, Dan. Yeah, before we dive into the commodity complexes, we've seen a bit of volatility in the dollar since last month. We've traded that index down to 100.5 and as high as 1019. We had a very volatile day today, and but that change in the FX doesn't seem to be directly impacting commodity prices quite as quickly or immediately as it usually does. We are awaiting the Fed's announcement here on what they're going to do with interest rates. That's going to be interesting. I think I'd say unchanged to down a quarter. I think the mortgage market seems to be pricing in a 50 point, 0.5% move on that. Just moving over to freight, a number of things in logistics. The dry bulk freight index has stayed pretty steady for the last month. It's just under that 2,000 mark. Not a lot of changes on that. Where we are seeing some logistical issues there in the Red Sea, the Houthi situation, the disruption of trade through there has sort of escalated a little bit in the last couple of weeks. More closer to home, we're looking at Mississippi River. Lower Miss is running a bit low. They reduced the drafts from 10 feet to 9.5. That reduces capacity. We have seen this hurricane come across, which should recharge that lower Mississippi a bit, but not a lot of water going into that Ohio, which provides over 3/4 of the water to that lower Mississippi. So it could be a problem as we go into those winter months. So we continue to keep an eye on that. Rail situation quite dynamic as this border situation with Mexico continues to strand cars south of the border. I know both the Burlington Northern, the BNSF, and the UP have a significant volume of their grain cars stuck south of that border. And the combination of the higher barge freight and rail car freights trading up above $1,500 premium for the cars, it's going to make for a very cheap basis value for cash grain delivered to this elevator during harvest, and put a good cash carry in that market to carry that grain at least into the new year till they sort out some of this logistical situation.
And taking a bit of a deeper dive into some of our crops, first wanting to start off with what we're seeing in wheat.
Almost no changes at all in the U.S. wheat balance sheet here in the September report. Now, there's a annual small grains production summary report coming out on September 30th. So it seems that the USDA probably wisely stood back and decided that until we solidify, have more solid output numbers, production numbers, we're going to leave almost everything unchanged, really, on the wheat balance sheets. So not a lot happening domestically, but still a fair amount. Fears, trepidation, exhilaration, whatever happening on the international side. Guy, you want to mention some things on that?
Yeah, a few changes in the minutia, country by country. Keep in mind, world wheat production this year's it was lowered 1.4 million metric tons to 796.9 million metric tons. And however, that's still up 1% from last year's number, and that is a record wheat crop. So there's a lot of wheat around internationally from a production point of view. Demand's been slow, but still near a record on the consumption. Looking at a few countries, Australia increased their production by 2 million metric tons. It's up to 32 million metric tons, and increased exports by a similar amount, up to 25 million metric tons. Keep in mind, they're geographically located quite close to those high-valued markets in China, Southeast Asia. Canadian production was left unchanged from last month at 35 million metric tons, but USDA increased their exports by 1 million to 26. Ukraine and Russia, moving there to the Black Sea situation. Ukraine production at 22.3 million metric tons, up 700,000 from last month, but down 700,000 from last year's production of 23. Russian production and export forecast unchanged this month at 40 million metric tons. Exports will be down 7.5 million tons compared to a year ago. Combined exports from Russia and the Ukraine are expected to decline by 11.1 million metric tons. So a little bit less wheat coming out of that region. The EU decreased 4 million metric tons in their production to 124, with exports down 2.5 million to 31.5 as they continue to be competitive in that export market. Argentina unchanged. China, one of the top 2-3 importers. Estimates are and the second largest wheat producer at 140 million metric tons. Imports steady at 12. From last month, that's 1.6 million less than last year's imports, so being tempered there a bit. That's bringing world ending stocks down to 257 million metric tons, about 600,000 metric tons higher than August. Ending stocks to use pegged at 32%, compared to 31.9% or 33.2% last year. So we're quite comfortable in that wheat, although it's tightening up. And I didn't run the world less China on that. Dan, do you happen to have that in front of you for the wheat?
World S China ending. I don't have the percent stocks to use, but just slightly higher ending stocks, 122.72 up 0.6 million metric tons, and but still higher domestic total usage. So still running a situation with that situation guy where we're looking at pretty tight domestic stocks. I would say here on Thursday the 18th. No, pardon me, Wednesday the 18th of this month, our colleague Antonina Braiaca, excuse me, is having a Russia-Ukraine region supply-demand discussion. And Guy, I don't know what you've heard, but what you have seen in the news, etc. But even these numbers that are stated particularly with regard to Russia, are still under uncertainty. They're debating back and forth just how much they are going to be able to produce. They've had some dry conditions, etc.
Yeah.
That's so I think Antonina will no doubt address that all that much more completely. And of course, since that's the key supply center for the world anymore, that's cheap prices, well positioned in terms of where the buying markets are. That part of the world's pretty big with regard to wheat. And of course, we've got wheat from Europe, Eastern Europe, other places coming into the U.S., and it causes a lot of concern.
Yeah, just a comment and a segue into the corn situation. One thing for both Russia and particularly the Ukraine, next year's production, I think, is shifting away from corn with a high dollar value and cost of inputs, away from corn production into more wheat and soybeans, where you have lower cost and volume of inputs on that. And I think that we're seeing that shift away from corn exports and into to more of the wheat and oil seeds there.
Yeah.
We're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by Guy and Dan, and we'll continue our conversation.